Hi, everybody. My name is Dorothea von Moltke. I'm one of the owners of Labyrinth Books in Princeton, and I want to welcome all of you who have signed in. It's an incredibly beautiful evening here, first spring evening in Princeton, and so I imagine people are still dropping in, and I see people still dropping in. I want to welcome you to this conversation with Katrin Kaeufer and Darrin Williams. They will be talking about the potential for reconceiving banking and finance such that they can play a role in creating a more sustainable and a more equitable world. And the occasion is the recent publication of Just Money, Mission-Driven Banks, and the Future of Finance. I'm going to just hold it up for a second, which is co-authored by Katrin Kaeufer and Lilian Steponaitis. And so in a minute, I will introduce our guests, but first quickly, a couple practical notes. Some of you will be familiar with these from other events, Labyrinth events. There's a link at the bottom of the screen, it's sort of a turquoise link, where you can click and buy a copy of Just Money from Labyrinth, and you'll get 10% off your order if you just enter the discount code Käufer at checkout. And if you prefer to order over the phones or by email, I have put the information in the chat for that. Then there's another button, an Ask a Question button right below that link. And the chat will come down during the conversation. So I want to invite you to click on that Ask a Question button and put any questions you have in the queue for us. So please go ahead, put them in there as they come to you during the conversation. We really want to make sure that in this hour that we have together, we address whatever angle of this vast topic of finance and how we confront the most pressing issues of our time is of greatest interest to you. So please use the Ask a Question button to let us know what most interests you and what you have questions about. I'm very pleased now to be able to introduce Katrin and Darrin. Katrin Kaeufer is a research fellow at the MIT-Community Innovators Lab in MIT's Department of Urban Studies and Planning. She is also research director at the Presencing Institute, where she's also a co-founder. And the Presencing Institute combines research and action at the intersection of science, consciousness, and profound social and organizational change. Katrin's own research focuses on leadership, on social transformation, and socially responsible banking. And those are all themes, the overarching themes of her new book as well. She has consulted with mid-sized as well as global companies, with nonprofit organizations, the World Bank, and with the United Nations Development Program in New York. And when Katrin and I discussed who might join her for a conversation about Just Money, the aim was, I think, to find a practitioner from the world of socially responsible banking. And she immediately thought of Darrin Williams. So we are grateful that he was able to make time and to be here tonight with us as well. Darrin left a successful career in law and politics. He had been member of the Arkansas House of Representatives to become CEO of Southern BankCorp. And this is a bank that is operating in low and to moderate income communities throughout the Mississippi Delta, communities that have been severely underserved by financial institutions. And the bank that he leads has a broader mission than making loans, which include financial education, free tax preparation, and much more that I'm sure we'll hear about. More recently, Darrin helped ensure that $10 billion for community development finance institutions were part of the second round of PPP loans from the government. So I am now going to pass the mic to our speakers, but I wanted just briefly to say that I myself came to Katrin's book with no background at all in finance, but plenty of concern, of course, about poverty and the environment in the US and the world over. And I found Just Money to be a lucidly written book full of examples of experiments in mission-driven banking, its history, its challenges, its potential. And Katrin and her co-author are clear about the paradigm shift in our values, the steep learning curve that will need to happen for this kind of change in banking and finance to take root and to expand. So my favorite chapter in the book might be the one where she addresses the condition for that kind of learning. I just wanted to quote her here for her articulation of one of the measures of whether people are bringing what it takes to revalue our values in this way. So here's a quote from the book. "If you have not learned anything new, you have not listened. The quality of listening in a room defines the quality of the learning process. And always, as she also says, we must listen in particular to the voices from the edges of the system. These are the voices that both she and Darrin amplify in their work. And so it's now my great pleasure to bring them up to the screen. Here is Katrin. Welcome, Katrin. It's so good to have you here. And now also Darrin. Let's see. Hi, Darrin. Welcome to the both of you, and I'm delighted that you're here and look forward to listening in now to your conversation.
Thank you so much for the invitation, Dorothea. And so I will start off with some more general remarks and then lead over to Darrin, who is actually doing the work on the ground. And I'm so pleased, Darrin, that you're joining us. I researched many examples of values-based banks in the world, and I feel Southern BankCorp is one of the outstanding examples and innovations in so many ways. Maybe very briefly, so the book title is Just Money, and it has a double connotation, just in terms of fair and just, you know, money has a role in our society and it's not our objective, you know, so money has to serve society. And Dorothea, you said, money and finance and banking is not your natural habitat. I have to say, if you had asked me, 30 years ago, what would you write a book on? It would be probably, I would have said a novel or something fun, and I would never have considered writing about money and finance. But I realized pretty quickly that money and finance is absolutely essential in society. If we care about our future, the future of our children, the future of our planet, we cannot ignore this topic of finance and money. I would say education and finance are the two essential access cards for every human being in society. And we know how important education is. And there has been a broad public discussion about education and the impact of our current education system, especially on marginalized communities. But we need to expand this discussion and include access to finance as another important topic. So one of the bankers that Darrin knows well, Thomas Yorberg, once said to me, he's the CEO of a bank in Europe. The first thing I learned as a banker was a loan can destroy a life and a loan can rescue a life. And this difference between destroying a life and rescuing a life lies in the hand of the financial institution that's making this decision. And I just want to step back for 1 second with 3 very brief observations. The first has to do with money. Money is such a strange construct. It's a social construct. It's a human invention, probably one of the most successful human invention ever made. But it has a huge negative shadow. So one part of the shadow is that money puts a price on value. It puts a price on human life. It puts a price on nature. And by doing so, money makes everything a commodity and part of the market system. So that's a shadow. The second shadow is that money is too efficient for us humans. Money is too fast. It's too global, it's too non-local. And because of these two things, as long as there was a monetary system, as we had attempts in human, in our societies to control this, to balance this. So values-based banking is nothing that just emerged. As long as we had money, there were attempts to balance this. So that was my first piece I wanted to put on the table before we start this conversation. The second observation you're all too familiar with is that we have a huge system dysfunctionality with our monetary system. And I don't need to go into the details, the accumulation of wealth in the hands of few is too familiar to all of us. The numbers are so grotesque, the 8 richest people hold as much wealth as 50% of the poorest human, people in society, in the world, on the planet. It's, the numbers are so grotesque that every rational human being knows that we have a system issue here. And we have created this system. So money is nothing that fell from heaven. So we created this, and now we are struggling to find a response for how to handle this. And personally, I felt when I started my journey in this field, I felt so overwhelmed by, I'm this, small human being, and there's this huge monetary system that disrupts our democracies, that creates all these negative externalities. How do I deal with this? And my personal journey led to banks and bankers that connect money with an intention, that connect, that reconnect the financial system with who we want to be as humans. And Tamara Vroman, Darrin, who you know very well, she was a former CEO of a huge credit union in Vancouver. She in a conversation told me, every financial decision writes the story of our future. So investments decide how our future, the future of our planet, the future of our society will look like. So we can't, so it's not enough to say we need to restrict the financial system. It needs more. We cannot solve the problems we are confronted with, whether it's climate change, when it's inequality, without a financial system that shares these values. And my third observation that I wanted to bring in, Darrin, before I lead it over to you, is that we've seen in the last 30 years an acceleration of, let's call it, social responsible investment, impact investment movement. So this idea that since, especially after the financial crisis of 07, 08, this idea that money is neutral, we just let the system run itself, it will optimize itself. This paradigm thinking has a crack. So when you look at the business roundtable, I think 18 months ago, saying, we also need to consider stakeholders, not just shareholders. The European Union publishing papers on sustainable finance, the true cost accounting movement. So this idea that we can just stay out of this game and not get involved as humans with our ability to judge impact, this idea is vanishing. And Darrin, I think the work that Southern has done for 30, 40 years is really, you are the innovators at the margin of this huge financial system that, and you are showing basically the rest of the system that it is possible to have a different approach towards banking and money. And maybe we can start off our conversation with, I know you also didn't wake up one day and thought, I'm a banker. So what was your pathway into this topic?
Sure. Thanks. Thanks for that question, Sharon. First, let me say that just
Can I just interrupt? We do have
so
an
important and
echo going.
impactful to the space, and so I just appreciate Just Money for the story that it tells and for highlighting the work that we do, because it's that amplification that we need to bring more people to the sector and for more people to understand that your money didn't just spend the night in the financial institution. We used out those resources to make decisions. And I love the way the book starts off. It says, banks define our future. And that's exactly right. And so my path to this space is not a traditional banking path. You're correct. So I am a lawyer by training. I spent most of my career as a practicing attorney. In fact, I was suing banks and publicly traded companies. I was a plaintiff's class action and consumer attorney, suing large institutions on behalf of small consumers and on behalf of shareholders for what we believe to be violations of their shareholder rights. And in my spare time, I really spent time teaching, or at least facilitating, financial education courses at my church. So I am a preacher's kid and a teacher's kid. I was adopted as an infant. At 2 weeks old, my parents adopted me, and my dad was 55 years old, and my mom was in her late 40s when they adopted a 2-week-old. I am 52, and I couldn't imagine having a 2-week-old. But I tell people that I won the parent lottery, and I saw in my parents every day people who lived what it really meant to care about others, to kind of have a social responsibility at the core of what they do. And so that was instilled in me. And as a young attorney, the chief deputy attorney general for the state of Arkansas, I really did a lot of work around consumer issues. And that's kind of where I developed this bend toward helping kind of the little guy from my family and from my work, and started facilitating this financial principles class at church, and just recognized so many people that I grew up with and so many adults really did not understand money, didn't know how to use money as a tool that it really was. And they were in financial situations that were difficult and didn't have to be, just because they didn't, as my friend John Hope Bryant from Operation Hope says, they didn't get the memo. They just didn't understand how to use money for the tool that it was. And they found themselves in difficult financial situations. And so at some point in time, I told my wife, Nicole, that, man, if I could do what I wanted to do for a living, this is what I would do. I would help people. I found a lot of enjoyment in helping people understand how to really, manage their financial situation. And as a legislator, I worked closely with a group called the Southern Good Faith Fund, which is the nonprofit affiliate of our financial institution now. I didn't know about Southern's Bank, but I worked closely with them, and they did a lot of work around helping low wealth people in the financial space. And so I got a strange call from the chairman of the board of Southern BankCorp asking me to go to lunch. We went to lunch, and they offered me the job to be CEO of the bank. And at the time, I was pretty excited, practicing law, and I turned them down. I actually turned them down and said, I'd love to help, but I'm excited. I enjoy practicing law. And I didn't even talk to my wife about it. And when I got home and talked to her about it, she said, well, man, Darrin, that may be the job that you asked for. Remember, you told me that if you could do what you wanted to do, you would help people understand how to use money as a tool and benefit their lives. This may have been God's way of giving you what you asked for, and you just turned it down. And I said, well, I hadn't thought about it that way. So we thought about it, prayed about it, and contemplated it. And so in 2013, I took over as CEO of Southern BankCorp, and I haven't looked back. It's been such a rewarding journey. And so I'm happy every day. When you get to do what you love, it's not work. And so every day I come to work, it's really about helping people. And so it's a great place to work, and it's a great organization to work with.
Can you share a little bit this unique model of Southern? So what's the core idea? Why is it different?
Sure.
What's the purpose?
Yeah, so at the core of who we are, Southern, we're really three entities in one. So it's Southern BankCorp, Inc., which is the bank holding company regulated by the Federal Reserve, FDIC in the state. And then there's also Southern BankCorp Bank, also a federally regulated for-profit entity. That's the for-profit side of the house. Then we have Southern BankCorp Community Partners, which is our nonprofit loan fund, where we also make loans, but we also do really high-touch financial education and financial development work. Collectively, the institutions work together, and our theory of change really is around helping to create economic opportunity in places that far too opportunities exist. So we operate and we work in the Arkansas and Mississippi Delta region, one of the most persistent poor communities of the United States. In this region, more than 25%, or roughly 25% of the people in our region are underbanked. About 37% of our branches are in areas that are below the poverty line. We are in areas that are called bank deserts. About 28% of the people in these markets live below the poverty line. And we were started way back in the mid-1980s. Then Arkansas's Governor Bill Clinton was looking for a way to stimulate activity in Arkansas's Delta region. The Delta region was known for its cotton production. And so during slavery, you needed a number of black slaves to bring in the crop. But as the farm mechanized, as the combine could do the work of 100 men, and as we moved out of slavery through Jim Crow and other facets of American history, there was no effort to retrain, to reinvest, and to retool the Delta. And so as governor, Bill Clinton wanted to find a way to create economic opportunity to invest in an area that had not been invested. There had been a lot of de-investment. And he saw probably the first development bank in the country, a bank called South Shore Bank, operating on the south side of Chicago, economically depressed, urban area, predominantly African-American. And the founders of this organization, Black, White, came together and said, let's start a financial institution that will invest in this community, invest in housing, invest in small business. And over time, this community began to thrive. And so the government said, I want to take that model and bring it to a rural environment. And so he invited the folks from Chicago to Arkansas with the Walton Family Foundation, the Rockefeller Foundation, two wonderful philanthropic organizations here in Arkansas, and others. They raised about $12 million and started Southern Development Bank Corporation. And from that humble beginning, today we're about $1.8 billion in assets, 49 locations spread out through Arkansas and Mississippi. And again, our theory of change is around creating economic opportunity. And we say that we are wealth builders for everyone. And the key for our work is around building wealth. And we often talk about a study that Pew Research has. It says 70% of the people who are born into poverty, they never make it out. It becomes intergenerational. So if your grandmother was poor and your mother was poor, you're likely to be poor. But what's unique about the 30% that actually do make it out, they all have some form of net worth, either ownership of a home, and they take that equity out of the home and send a kid to college, and that breaks the cycle of poverty for that family, or a small business. And so our work focuses on things that have been proven to build net worth. So we focus on housing, affordable housing. We focus on job creation and retention, and on empowering people to save money. And our focus there really provides a net worth of people to build that financial stability and move from poverty to prosperity.
I just wanted to emphasize from what you've said, I want to pull out a few pieces. So one, what I find amazing about Southern is that you combine, I call this sometimes different qualities of money. So you have loans, you encourage saving, and with the development arm, you also have gift money. And I think that's sometimes something we forget in society. We are so focused on the return. So I work here at MIT, which is actually a huge gift money machine. You have all these, we have, I think, 18 of the 20 biggest biotech hanging around the campus. Why? Because the new idea and research happens at MIT, which is gift money. So to think that a community can be developed without gift money, but we accept that in our high-end technology path, I think is a mistake. And the second thing I wanted to emphasize is the Black banking movement in the US that led to the CDFI is also something that is ignored and often not seen, how important that was. And then the last point, which connects to your last thought here, is that that the core character of banking is to disconnect from communities, is to disconnect from reality. So for a bank to give a loan to a multi-billion business is easier than to give a loan to an entrepreneur in a rural area. So you rather give out a 300 million loans than 301 million loans, or even smaller loan. And so the power of money is to standardize and disconnect. That's the core character of banking. And you do this differently. So how do you do this? And how do you know what your communities need? And how do you resist this pull into standardization and staying close to your community?
Yeah, no, you're exactly right, Katrin. So let me take all three of those things you talked about. First, what you call gift money or grant funding. That's very important to the work that we do, and we try to maximize the different entities. We say we're one Southern and have one mission, though there are three different entities, and we intentionally have this nonprofit affiliate because they can do things that a traditional for-profit cannot do. So we do a number of things that are just done at no cost to the customer. So we provide a rich, robust financial education and development program. We work one-on-one with borrowers. So wealthy people have wealth advisors, right? If you're wealthy, you have someone who helps you, multiply your wealth. Well, low wealth people also need wealth advisors. So we have wealth advisors, credit counselors, homebuyer counselors, people who work one-on-one with individuals wherever they are on their financial journey and help them move to a place of stability. And that's at no charge, whether you're really a customer of the bank or not. And we do that because we can attract grant dollars or charitable funding from philanthropic organizations that want to support that work. And that's important to the work that we do. And you're right, we are also what's called a community development financial institution. And there are probably 1,100 CDFIs across America. That's a certification by the Department of Treasury. And we're proud that Southern's DNA really is the basis for the CDFI movement. When Governor Clinton becomes President Clinton, he took his work with Shore Bank and with Southern to Washington, D.C., and in the Regal Act, he institutionalized this new banking model at Treasury called CDFIs. And so his thought then was to have 100 development banks across America. And so he put into the Regal Act money at Treasury to support and really certify these types of banks. And today there are over 1,100 CDFIs. They're banks, they're credit unions, they're loan funds, and they're venture funds, all working. And as a CDFI, we must commit that 60% of our activity takes place in what you would characterize as low and moderate income census tracts, communities where banks don't typically operate. And so that's why I say 37% of our branches are in bank deserts. We're either the only bank in town or one of just a few. In 6 of our markets, we're the only bank there. And in 16, we're one of only 2. And so that's important. But then the idea of really being connected to our community, that's so very, very important to be a part of the real economy. And you're exactly right. From a pure profit standpoint, it's much easier to make $1 million loan than it is to make, $110,000 loans. And so, for example, last year we did 7,022 loans for a little over $600 million in loan originations. 47.4% of those loans were for less than $10,000. 1,400 were for less than $1,000. Now, there's no knock on a big bank. That's just not their model. But if you go to a large bank and say, I want a $10,000 loan, they're going to give you a credit card application. And that's going to carry a 20% interest rate. And we underwrite that loan like we underwrite a $1 million loan. And we provide a fair, affordable rate. And sometimes that rate is really the difference between a business being profitable or not. And so we're financing things. It's what you talk about in your book, Katrin. You talk about the missing middle. It's the missing middle, right? So small businesses in our market, they need money to buy equipment, to buy product. They don't need large loans. They need those small loans. And in our markets, if we lose a small business in a community of 2,000 people, and a business goes out and employs 20 people, that's a big deal. Maybe not in New York, but in the markets we serve, that's a big deal. And so we know the further a business gets away from traditional sources of capital and credit, the more it's replaced with predatory, sometimes high cost capital and credit. And so those small loans and having that close connection to the community and being lending based also on character and knowing your customers is so very important to the model that we operate. And allows us to be flexible, but also allows us to be sustainable because we understand our customers' need and can craft and underwrite as well as structure a loan in a way that they can be successful and we can be successful as well.
And I want to also emphasize from what you said. You enable people. So there are, communities and there are entrepreneurs in the community who have ideas and they cannot bring this to life without finance. So finance, I think we also carry culturally in society often a negative image of debt. So if that is done right, it's an enabler for an idea. There's no start of a business without what you provide. So I would like to also look at the larger system. So values-based banks are a small part of this huge, enormous financial system. And you already gave an example how Clinton used in his legislation around CDFIs you as an example. So how do you feel being part of such a huge system? I mean, I almost feel like values-based banks are a completely different animal than mainstream banks. What's your relationship there, or how do you deal with, being a small player in such a large system?
Yeah, you're right. We are a very small player in a multi-trillion-dollar system, and so I think we punch far above our weight, and I think at least in across the world, but to focus right here in the United States, last year was a really impactful year for the CDFI and minority depositories. This is the financial space, because I think last year really helped to highlight the structural inequalities in our current financial system. And I'm really focusing on the disproportionate impact of COVID-19 on minority communities, in particular, Black and brown communities, the disproportionate, not just health impact, but the disproportionate economic impact. And also, I think the murder of George Floyd also helped to highlight just discrepancies and inequalities in American society in general. Unlike the housing crisis, when the government needed to bail out the banks, the economic crisis that resulted from COVID-19, people not being able to, business having to close, not being able to work, banks stepped up through, or the federal government used the channel of banking to really support small businesses. And so, as you mentioned, we created the government created the Paycheck Protection Program, and that some almost $900 billion dollars in 2020, and now it's carried over into 2021. That was, we used the financial system as a channel to distribute resources to small businesses. Well, when the banking system is not equitable, when people don't all have fair access to the banking system, if we're using distribution channels that in themselves are inequitable, we know the recovery is not going to be broad-based and not going to be equitable. So what we saw happening is that a number of rural, a number of minority, a number of very, very small businesses, and a number of women-owned businesses were not getting access to the Paycheck Protection Program. So larger businesses who had a relationship with traditional financial institutions, they got the government tax dollars to keep their doors open or to keep their employees on the payroll. Small businesses who had been denied credit from banks, or who had no relationship with the banker, had nowhere to turn. And fortunately, because we had close relationship with our borrowers, we were able to engage deeply in the Paycheck Protection Program. We actually did last year $112 million in paycheck protection loans for 1,300 borrowers. But what we recognized is there was a huge group that were being left out. And so we started lobbying Congress, we started lobbying the administration for a carve out to go to banks like Southern and other CDFIs and say, we serve a segment of the population that don't have traditional access. They've been denied capital and credit for a number of reasons: for pure discrimination, for lack of access because there are no banks around, or because their business model and their financial wherewithal did not meet the standardized underwriting profile of a larger bank. And so we're proud that we were able to negotiate with a number of folks that the administration and Congress carved out dollars in the Paycheck Protection Program to ensure that we were able to get resources to small businesses that need it. And so we do think we punch far above our weight. We clearly don't have the resources, but I think the influence now, I say we're the best kept 40-year-old secret. Now people know more about us. And so let's hope that through our work, not just here in the US, but the global movement of mission focused and values-based banks across America, across the world, actually, we can influence the banking system for good. We want to finance the change we want to see, and we can be a catalyst to do that.
So what you just referred to is also, I think, our connection.
Yeah.
So that the Global Alliance for Banking on Values. So this is a movement. I think we are now 67 or something banks around the world, from Bangladesh, India, several African countries, Latin America, Europe, and North America. And because these are all small banks, we trying to create a movement for a different type of banking. And I think one of the biggest learnings is that transparency is crucial. So it's transparency between, I deposit my savings to what happens with my savings is essential. And with the, programs that you just referred to also, where does the money go? And maybe in closing, I'm aware we are coming. We also want to invite questions here, so feel free to add questions. So that's the system perspective, but there's also a cultural perspective within the bank. So you need to hire bankers that were trained to just look at one number, profit. And now you're saying, and this is not just a values-based banking topic, this is how we think our whole economic system works, how every corporation works. This is, I have a number, but I add a quality, the quality of the impact, the quality of what I want to create. So how do you lead an organization where, you also transform how to run a business?
Sure.
Do you have any learnings or, yeah?
Yeah, no, that's a great question. So you're right. Of course, Milton Friedman's, maximizing profit motivation, that doesn't work for us. We really believe that our mission, the purpose why we exist, is our competitive advantage. And so we think about profits from our purpose. And we think our purpose actually makes us more profitable. And we've always thought about this in terms of stakeholder capitalism. Well before this became a popular term and before people started talking about it. We were impact investors before we knew what impact investing was. And so we think very, very critically about really 4 stakeholder groups. We think clearly about our customers, but we also think deeply about the communities and the impact of our work on the communities. And of course, our employees, and yes, our shareholders, because they have to have a market rate return as well. But there's a return profile that's more than just money. It's a broad-based return of the impact. And so we're organized as a public benefit corporation intentionally. We want the world to know that our mission as an organization is not just about making profits, but it's also about making a difference. We make no excuse. We want to be very, very profitable. And we say all the time, no margin, no mission. So it does no one any good if we don't make money. We want to make money. We want to be profitable, but it's our mission that leads us. And I use this analogy, and it's not original, but we're riding this bicycle, right? So the front wheel is our mission wheel. It guides, it directs us, it steers us where we go. The back wheel of the bicycle is our margin wheel, and it sustains us and empowers us. And my job as CEO is to keep those wheels in balance, to make sure that they're in balance and they're going in the same direction. And so the work that we do, banking is really a commodity. You can get similar products from banks all across the spectrum. But when you put your money in a values-based bank, your money is being used to do good. Your money can be aligned with your mission and purpose. And more people are beginning to care and think a lot about their spending decisions. And so there's a chapter in your book talks about where your money spends the night. And your money in a values-based bank spends the night. We take that money and we use that to finance the good that we want to see in America. And so you can align your money and your savings in an institution. For Southern, we're going to help single moms access capital credit. We're going to help support low wealth families have the resources to buy their first home. We're going to empower people to save money and work themselves out of poverty and away from government assistance. And it's the deposits that people put in the bank that actually help make the difference. So your deposits can sit in a large bank or in a bank that doesn't have your values, or consider a values-based bank and actually do good and earn your return. And so there's a culture around really making sure our team members understand that. I said all the time, it's not my phrase again, but culture trumps strategy. If you got the right culture, your team will develop a winning strategy. So we built a culture that We are here to build communities and change lives. And if you just want to be a banker, then you need to go down the street somewhere else. If you want to really build communities and change lives and stay closely connected to the community and have an impact on the people that you serve, this is the place for you. You need to be in a values-based institution.
I almost hate to come back up and interrupt this conversation. It feels like it could go on for a good long time. There are questions coming in. I also want to say it's really kind of special the way that your dialogue just now mirrors the procedure of the book, Katrin, because you have the book is so grounded in these case studies, and you then are there to draw out the lessons and help us see the system and the structure and the possibilities for really radical reform, maybe even a revolution in banking. So with that, let me just now turn to the questions and pull from here and just kind of toss them your way. Some of the questions are thinking about some other examples. So here is Joe saying, what about Kiva and other quote unquote poor banks? Do they achieve positive results?
I'm happy to start here. They do. I mean, all of you are probably familiar with the microfinance movement. That's one example that I like to quote. So there was this huge hype about microfinance, and it's a solution for everything. And then suddenly we saw players in the field that created really negative impact. And the same is true with all these innovations. At the end of the day, it is about the intention of the people who are doing this work. So there is no mechanism, I develop a new financial product, and that's now solving all our challenges. And, with all of that, the intention of the people that are innovating cryptocurrencies, new financial products, new financial solutions, create the impact that's connected to their intention. So there is no general answer. I think that's what I want to say. I don't know, Darrin, how you see that.
Yeah, no, I would agree with that. I think what's really key, Katrin's talking about intentionality. That's really the key. You have to be careful that the impact investing terminology doesn't get hijacked and become only branding and marketing. What's really true about values-based banks is that what's central and core to the business model is its purpose. And so we're double and triple bottom line institutions, but what's core to our very purpose is our mission. But for our mission, there's no reason for us to operate a bank. We're not a bank because the community needed another bank. They needed a bank that was going to make a difference. And so, without our core mission, which is embedded in everything we do, from our governing documents to our form of organization, we're a public benefit corporation because of that. We never, for example, we never have a margin goal for our team members without having also a mission goal. And we think about the things that we finance, and is it consistent with our mission? And so there are a lot of innovations out there, and a lot of companies doing great work, but what's key is the intentionality that Katrin talked about.
Yeah.
I find it, and this also applies to B Corps or mission-based businesses all around the world. So at the end of the day, you need to look into what's the real intention of people behind that. So you can start an electric car company, but if your intention and mission is not to address the challenges we face as society, this company will also create harm.
Yeah, I find that note of caution from you, Darrin, about the danger of mission-driven or banking becoming its own kind of just branding, empty branding, so interesting and so important. I think we've seen that happen with sustainability and lots of other things of that nature. Let me just, because Katrin, you mentioned cryptocurrencies, I just want to pull up a question that relates to that. if I can find it here. Gabriela Bergamo asks, in terms of digital money versus traditional money, what is your opinion regarding money accessibility?
So the cryptocurrency idea first felt like, democratizing access to currency. Currency is held by nation states. It's centrally controlled, and cryptocurrency first felt like, is this democratizing access to currencies? What we've seen is that the current form of cryptocurrencies are mostly speculative or dark money, and they come with a huge ecological negative footprint. Having said that, there are also initiatives for national cryptocurrencies. Sweden, China, Brazil are all experimenting with national cryptocurrencies with different intentions again. I think China with the intention to create an alternative to the US dollar globally, Sweden with the intention to create a stable national currency that's not affected by this huge gamble that's currently going on. So there is no easy answer. I have a few students actually in Latin America that experiment with creating alternative cryptocurrencies to help informal communities to have their own currency. I find that really interesting. So I think the speculative part will continue for quite some time. It will get regulated. If you ask me what's going to happen, I think the next huge disruption could actually be Amazon. So imagine Amazon issuing an Amazon coin or whatever, giving each of their customer 1,000 or 1,500 or 2,000 Amazon points. So they immediately create a global financial institution by doing that. So concluding, there is this paradigm around what is a currency, who controls a currency, is at the moment changing and opening up. I would love, Darrin, I think I said that in our last meeting, I would love to see a values-based currency, but so we need to discuss it.
Yeah, I don't spend a lot of time. We do a little time we're thinking about cryptocurrencies, but what we think about probably just as much is the technology behind the blockchain, what allows cryptocurrency, and there's an opportunity for some real powerful work. And Southern, what's unique about our institution is that we are very, very innovative and very, very kind of technology forward. That's because one of our founders was really a gentleman named Walter Smiley created a company called Systematics, which is kind of one of the first kind of software that helped to banks to kind of handle their core back office function. We actually years ago built our own core processor, and we've actually now built a cloud-based core processor using a lot of the blockchain technology. And we just believe there's a powerful transparency. There's a powerful ability to use open architectural platforms to solve customer problems. Banking, we've really given off the innovation of banks, which will allow us to reach people at scale to a few companies that run core processes. And we really believe that we can solve customer problems if we can create quickly, try, fail, try again, and using some of the technology that actually runs cryptos, the blockchain technology, might allow us to solve problems at scale for people in ways that we don't have that ability to do so now. So I think more about it from that standpoint. How can we use the technology to actually truly democratize finance? And I agree, Katrin, it'd be wonderful if we could create a value-based currency.
With this mention of the idea of Amazon as a cryptocurrency-based kind of financial institution, you've really planted a dark vision in my head, Katrin. So I will go now to the question that's been patiently waiting in the queue for the first question that's been in the queue, asking, where do you stand on the idea of giving money directly to poor women, for instance, in the third world as a form of charitable giving?
I believe that money enables, and I'm in general very much in support of this idea. I feel this this notion of, you know, we only give food or we direct help, and we preconceive what kind of help is needed instead of using money as an enabler. Yeah, so putting these two next to each other, I'm definitely for money, but in the beginning I said education and money are the two entry points into development and stepping into your potential. I think money is not enough. So, you know, education and also, you know, when we talk about cryptocurrencies and all of that, these are not solutions. I you know, after having researched this field for 15 years now, my conclusion is we have a financial system that reflects us as society. So that there is money being misused to attack our democracy, that there is an inequality in society, reflects how we are living our society right now. So just changing the monetary system, I think, is not enough. We need to evolve our democracies. We need to evolve as society. And my research on, for example, alternative currencies, cryptocurrencies, is that they work well with communities that are well held. So the quality of the community impacts the outcome of a financial experiment in the community. That's why it's so important that Southern has also this development arm. So it's not one or the other. So the financial system reflects how we organize ourselves as society.
That's a great question, and I too support some type of minimum, income. It's in a country as rich as America, it doesn't make sense that people go to bed hungry. And so we think of our work in a number of ways. So as a financial institution, we have products and we have services, we have programs, but we also do a fair amount of work around policy. I think that's where you have real change. So let me talk about some policies that are really kind of local to the state of Arkansas, state of Mississippi, where we serve. So in the state of Arkansas and Mississippi, the government has a program called the Target Assistance for Needy Families, the federal government, and they actually give housing assistance and food assistance to poor people to kind of help them with basic income. In the state of Arkansas and Mississippi, if you have more than $2,250 in assets, then you're not eligible for this food or housing assistance. And so think about that. You can never work your way out of poverty to build a financial stability for your family, because there are people working for these departments of human services. Their job is to check your bank account to see if you have $2,250. And you think about that, that's probably enough to make a deposit on a place to rent. In 35 states, we've removed those limits, and in additional 10 states, we've expanded those limits. We're right now, as a financial institution, we're in legislative session now. We're asking our legislature to expand those limits. First, I don't think we can get them removed, but to expand those limits to allow people to build the financial cushion to be able to work themselves out of poverty. So that kind of goes to this basic income. We work with a number of programs. One is called an individual development account. And if you're able to save a small amount of money, then we match it 2 to 3 times that amount of money, and you use those resources then to go go toward school, go toward a small business, go toward housing or home repair. And in many of our success stories, it is that small amount of money that actually is transformational to poor people. And I'll give you one more example. Katrin talked about education. Unfortunately, in the state of Mississippi, there are more storefront payday lenders. And a payday lender is someone who traps you in a debt cycle. They give you a small amount of money for a short period of time, knowing you can't pay it off, and then allow you to roll it over with other small amounts of money. So a $400 loan, by the time it's rolled over 8 or 9 times, becomes a $1,200 loan, and you've paid somewhere around 400, 500, 600% interest rate on that loan. These are people who really desperately need those resources. So we provide financial education to people in this situation. We've got a great story of a young lady named Darrin Williams. She's a teacher in Mississippi. She had 9 payday loans at one time. And so every time she got paid, she drove around to each of these payday loan shops, paying $50 on about a $400 or $500 loan, never able to pay it off. She did this for years. She took one of our financial education courses. At the end of the course, We gave her a very, very small dollar loan that she took to pay off the first payday loan, and we taught her how to continue to pay them off. Now she's debt free. She's been able to clean up her credit, and she's one of our biggest advocates for our educational programs. And that's just a small amount of money, not a lot amount, but a small amount of money given to someone that really becomes transformational. So I think a basic income or just some type of charitable support, philanthropic support is transformational for people.
I want to just say that I think I'm going to take us a few minutes past the hour because there are a few more questions in the queue. If folks have to leave right at 7, know that you can come back to the site and finish listening in on the Q&A. And then this conversation will also be on the Labyrinth Books YouTube channel in a couple of days, just so we don't have to truncate the Q&A too much. And that gives me also license, maybe, if I might, to slip in a question of my own that links up with your mention of the policy work that you do, Darrin, because as I listened to you and as I was reading your book, Katrin, one of the questions that was very persistent for me is that your work and the book are so focused on the private sector. It's all about what the role of the private sector is. But I'm wondering if you each had sort of 3 wishes for what the government could do to incentivize, to make it easier, whether it's about laws around governance structure or tax-related issues. Like, what isn't there also a role for the government to enable the growth of mission-driven banking? And what would that be?
Absolutely. And I had a few conversations with folks here at MIT who are close to the government, and they are almost, when I say I'm working with these community banks and so on, they're like, oh, they still exist. So they are so not on their screen. So banks, the thinking in government is banks are the big guys. And this idea that we need to diversify the financial sector is not present. So if I had a wish, definitely. And regulators are also often not interested. And so what Darrin described, this how not difficult, but how detailed oriented the work is to give out small loans. This is also true on a policy level. So it's easy to create policies, not easy, but create policies for these 5 big banks. They are on the screen. But to regulate and create enabling conditions for this huge network of small community banks, credit unions, etc., nobody's really interested in that. But it's the same with small and medium-sized companies. This is where the job growth happens. This is where the innovation happens. This is where the renewal of society happens. But the attention doesn't go there. So if I had a wish, it would be take this seriously, create enabling condition, create policies for that, and also public awareness about what does your money do at night? What's the impact? So I might buy organic food or drive an electric car, but what happens with my money actually is also my responsibility.
Yeah, well, that's a great question, and as a former member of the Arkansas General Assembly, I've got a lot of policy initiatives. I could go on for days, but you asked for 3. Let me try to nail 3 for you real quick. One, I'll piggyback on what I just talked about how the government support to poor people has so many strings attached to it. I would love for our government to give the same flexibility to the support it provides to low wealth people as it does to wealthy people. And there are not these detailed restrictions on tax incentives for wealthy people to do things, but they're detailed restrictions even on how much you can have in a bank account to receive government assistance. Why do we think that poor people are any less able to make smart decisions with their money than wealthy people? So that's one. The second is increase funding and support for mission-focused banks like Southern and other CDFIs. I think if we learn nothing else from this pandemic, that if we continue to use traditional channels to distribute resources like traditional banks, we're going to leave a lot of people behind. And so I think that that CDFIs and MDI banks, minority depository institutions, we punch well above our weight in this most recent crisis and have helped a number of institutions that would not have received help with, I mentioned we did 1,300 paycheck protection loans for $112 million. What I didn't mention is there were a number of very, very, very small businesses that even with the rules and even with the capital going to us, they still couldn't access the program. And so what we did is we went out and raised, with our nonprofit arm, went out and raised philanthropic dollars and just gave them resources and said, here are resources for you to retrofit your businesses to buy the PP&E that when the economy opens back up, you can open your business. And we did 128 what we call business continuity grants. We need continued support, and I'm proud that in this most recent stimulus package, the government has stepped up and they put an unprecedented amount of money, made it available for CDFIs. And so hopefully we can reach scale with that. So that's the other thing. And then the last thing I would say, and I've got a laundry list, but I asked for 3. The last thing I would say is to kind of revisit the consumer protections that we saw coming out of the previous administration, Obama administration, around the CFPB and how we regulate those that take advantage of the poor and those who are sometimes least able to assist. The payday lending industry that I just mentioned, it's criminal what many of these institutions are charging people who are desperate for small amounts of money to access that capital and credit. In the state of Mississippi, there are more storefront payday lenders than there are McDonald's, Burger King, and Starbucks combined, and they're all over the place. In many markets we serve, my competition is not another bank; it's a payday lender because they're everywhere. And so more regulation around how we support those who need help and find themselves caught in the debt trap, like Jennifer Williams that I talked about earlier. That's just 3. I could go on, but that's 3.
Yeah, well, we'll have to have a follow-up session or one day a shared meal or something. Thank you for that. I'm going to give the last question here to Andy Aitkenhead and maybe broaden it out a little bit. He's asking, Darrin, how would you describe the culture of your bank and how does it differ from legacy financial firms? And maybe invite Katrin also to comment on really, because you address it in the book, what are some of the profound cultural shifts that have to happen for these kinds of institutions that Darrin, you work in, and Katrin, you talk about, to thrive and make a difference?
That's a great question. So I think what's one of the things, and we're very, very intentional about trying to build a culture that will support our mission. And so what's first and foremost for us is our mission. Again, that's the front wheel of what we do in the bicycle that we ride. The back wheel is the margin wheel, which sustains us. We need to make profits to be able to accomplish our mission. But again, we will never, for example, have a incentive or metric for our a goal that is only profit driven without having a comparable goal that's mission driven. And so we make sure that our mission stays front and center with who we are and what we do, and that is foundational to who we are. And so, becoming a benefit corporation, for example, which is in our government documents, we are saying to the world that our mission is important, and we are publicizing in an annual report the things that we value, and we're telling the world, here are the things that we value. Here is who we are, and that is reinforced in almost everything we try to do at our organization, from a standpoint of really building the type of team and the type of culture in the organization to allow us to be successful. And what's really powerful is we operate in some very, very small markets, and our team members, many of them grew up in these communities, so they care deeply about the places that they live and that they've grown up in. And the success of Southern and our institution is so tied to the success of their community, and they want their community to be successful. And so it's really about helping the community where they grew up. It's about making decisions that you think about more than just a profit, but you think about the mission, but you think about the impact of what you are financing and what that has on, as Katrin talks about, the ecosystem, as opposed to the ego system, which is just a profit and the money that the bank makes. And so there's a number of things that we do like that to really ensure that our mission stays front and center to the organization.
Yeah, maybe just to add a little bit to that. So working in a business where one focus is on impact is more personal than just you bring your whole person into your daily work. And on the one hand, it's more fulfilling because you don't live two lives. On the other hand, it can also be tricky. So what I've heard from some is, when I worked in the business before, I was assessed just on one number, and I knew when I was right or wrong. And now, it's more vague, so I have to also bring my own judgment to the table, so is this the right way to go, or is this the wrong way to go? And also, I don't know, Darrin, whether it's your experience, what I've seen sometimes, I coach some bankers in this field, is that sometimes feedback is more personal because it's closer to your heart. And so it is, but I feel all of this is, and when I look at my students today, and I don't know, 15 years ago, I feel at least the students I teach, they don't want to work, most of them, not all, don't want to work in an environment anymore where it's not also about purpose. So I think this idea that we leave our personality at the entrance is coming to an end. I'm not saying it's everywhere, but I see this more and more that students are asking me, what are mission-driven organizations I can work for. So I think there is a cultural shift in corporations in general.
Well, that's a really hopeful note to end on. May it be so, Katrin. And what you're describing is maybe also the discomfort of stretching ourselves and in new ways. And I think we have to be open to that and embrace it as a good thing. It's been really rich to listen to the two of you and to think along. Darrin, there's a note in the chat, I don't know if you saw it, from Donald, saying that we need your cousin in Camden and Newark here in New Jersey. So I think it's been inspiring for everyone who's participated and listened in tonight. And so from me, just a warm thank you for this time, and find this guidebook, handbook, from your nearest and dearest independent bookseller. And thank you for that resource. I think it will be valuable to many, Katrin, and for sharing all your incredible experience, Darrin. So with that, I wish you a good night. I wish all of you a good night. Take care. And as always, stay healthy in this time.